How are you? Wonderful Wednesday to all. Please give me some okay that you can hear me and that you can see the screen as well. Perfecto, thank you very much. So how are you so far, guys? I hope your week is going good. The market is slower so far this week. Of course, it's understandable as the rate decision yet to come next week, CPI to come tomorrow. So a lot of things still yet to happen fundamentally that should boost up the momentum, or restart the momentum in some of the pairs. Some other pairs are moving interesting and likely to provide opportunities as well. So what we will be doing right now is let's go over the report. I started to mention before the fundamental news, so just pay attention to the two main events coming this week. First of all, the rates and the press conference in Europe, rate decision and the press conference, that's tomorrow. CPI and the core CPI in the US. The numbers are expected to drop lower, but if they would be as stable as before, or at least more positive than the expectations, and not more and not negative, that might mean that the Fed would not rush into rates cut, despite what Trump's and everyone expects. Retail sales and core retail sales on Friday, and of course the main event is next week, and all the eyes are to here. As you can see, the expectations are for a cut. A lot of things might happen and develop after this decision. All right, so let's begin. What are the pairs we have to update? So first of all, the Aussie franc. We had a massive bullish run here. Beautiful trade, which I expect further on to continue and go higher and higher. So basically this. However, on the current structure, this is what we face. Bullish trend, as you can see, with, of course, the ability to break it even, break it even into something like that, with a building ending divergence. Now, we need to pay attention to this level, massive area. A lot of orders are located here. We can expect some serious, we can expect some serious fight around this area. This is a clearance zone. Also consolidation zone, as you can see. A lot of orders would be located here on this retest. So the ideal scenario for us would be some clearance, right? Clicking it, cleaning it, making here some cross, and then start looking for possible short-term retraces. Since we are at a position where we are at the first leg from the daily, the idea here is against the current trend. This looks like a possible false breakout. By ideal, we would require another one, and then lower lows and short-term sell the rallies. The alternative for false breakouts, as you remember, I hope so, 3 lower highs, 3 lower lows, and then sell the rallies. Okay, so Aussie franc is on a critical area. Also, Bollinger Bands provide here a good rounding conditions, so we could expect some corrections. Once again, we ideally want to see that cleaning, and then we can also trade it. So this area for all those who are involved in the buys is a very good place to take good part of the profits. At the moment we will get the correction, and correction in that case could be two waves. Correction could be a range. Correction could be simply one shot and bullish hidden divergence, which currently I don't see happening. But everything could happen, of course, right? Most likely with such conditions, it would be some two waves or a range, and then we'll be looking for the longer term buys. So long story short, for all those who are involved in the buys that we have running for a good while now, that's your place to enjoy some of the profits. Once we will get a setup for the next possible rallies to happen, it will be a good place to bring back the cashed position. Invalidation for anything like that is always the 61.8 if we suddenly crash with one straight leg. In such occasion, you know, it's a removal from the list. So this is the first one. The next one is the Aussie versus the Kiwi. We are expecting a corrective cycle. Corrective cycle at that place could be, as we discussed, two waves or a range. The way it looks right now, it is a range. And we are counting here some spots inside, right? So if we continuously to hold and then make the breakout, this would be a good place for the next possible bullish continuation. Meanwhile, due to the pressure from the daily cycle, due to the pressure from the bearish divergence, currently we are still in sell the rallies. Oops, sorry. Yes, it could try to spike here, but every rally at that current conditions, before we have 5 spots inside the range or more, or before we completed any clear two waves, every rally with a bearish setup, even if we make a new spike here, would be considered yet as an opportunity for a sell. So the short-term corrective cycle is yet the plan, and once we get it happen, that's the leg we are going to look to trade. So that's the Aussie Kiwi, no change. Aussie dollar, we expect two waves development. So we want to see correction to the downside. Brett, do I use support resistance to identify key levels? No, I only work with cycles. For me, it's all about the cycles. I suggest inside the report here, you have the most important webinars, right? So the cycles and the divergences, of course, the combo of together would give you the clearer picture. The cycles I work with, I identify with Fibonacci expansions. Support, resistance, trendline, etc. are all tools for assistance, not a decision maker. For me, it doesn't mean it's not good. It's just for me. First of all, everything relies on cycles, verified by divergences. Okay, I hope it answers the question. So this is for the Aussie Kiwi. Aussie dollar is our next one. We want to see the correction bringing in some next buy opportunities. We marked this level, if you remember, and this is as a possible second level. So this area is cleaned. This one is still not. This is the zone where we would expect the corrections to happen. Take a look on the Bollinger Bands, again rounding down with 20 candles right over the top Bollinger. Bearish divergence is in play, so the corrections should take place. And again, same story. Corrections could be developed in 2 legs, range, or simply one shot with a bullish hidden divergence. Keep in mind that once and if this would become a bullish hidden divergence, 1 hour chart would have to verify, right? So this would have to be some good divergence by itself. Very important to remember that. Okay, so basically the plan is unchanged. We don't yet have the retraces, and we are yet following this plan. Euro franc, we've been riding on the buys as well, and right now this pair completed finally 3 pushes, 3 legs inside this first daily leg. You see the blue line represents the daily leg. We break it into a cycle on the lower time frame. Bearish divergence in play, corrective cycle should be in play. So basically this is what is expected. 1, 2. Now since the daily is a cycle that we are working with in that case, right? Double or triple, decide how you want to break it. The corrective cycle also to happen on the daily. Corrective cycle could be in 2 waves. Corrective cycle could be a range. This or other way around. Well, that's the case. The plan is bullish. 4-hour chart is the one that made us the triple cycle, 3 higher highs, 3 higher lows. So the 4-hour chart to provide us 2 waves correction with a bullish setup. Bullish setup could be a bullish hidden divergence as well, right? Or a range by itself. And then after 5 spots inside with a breakout, we can discuss about continuation. Okay, so Euro franc first rally paid corrections in 2 waves or a range or bullish hidden divergence, and we are after the buys. Pay attention that this clearance, a lot of stop losses are located here. Good place to cash out. Does it make sense to sell here? Of course not. You're against currently daily and weekly divergences. Doesn't make sense, even if it will pay few pips. Why? Right? We always will want to go with the higher cycles to increase the chances to enjoy bigger payouts. So the Euro franc, once again, those of you who are involved, this clearance with a divergence and the mainly the false breakout, of course, good place for cash out partials. And now wait for the retraces with bullish hidden divergence or 2 waves or a range to continue and bring in back the buys that were closed in profits. That's the plan here. Nothing new under the sun here. Euro yen also was building the second leg, and we are riding here pretty good. And here we are. This is the second leg completed, and now look what happens. Triple descending cycle. Right with a false breakout on the top. 1-hour chart verifies it as a cycle by itself. And we are now into correction. Now going back to the weekly and the daily cycles, we expect here. We expect the corrective cycle to be on a daily chart. And again, like the previous pairs we saw, 2 waves or a range. Both would be completely acceptable. This or other way around, the plan would be still looking for the buys. So 2 waves correction or a range correction on the 4-hour chart now, right? Remember, this is your daily leg, and the blue one will be the break you do on the lower time frame to support the view from the daily, right? So back to the blue, which is the 4-hour chart, 2 waves and a rally. Bullish hidden divergence would be a great sign here as well, or a range. This is our plan to look for the future buys. And for all those of you who are involved in this beautiful run, when you see 2 false breakouts and 3 higher highs, higher lows, make sure you put some good part of your profits in the pocket. Now, in terms of Bollinger Bands, the 20 candles right on the bottom paid out the target, which is the opposite Bollinger Band, right? Next one, due to the cycles, would be this kind of expectation, like it was here, round down and 2 waves. That's the idea. So this is for the Euro Yen, and again, we got the movement. This leg was built by itself by 2 legs. We reached then the divergences, the false breakouts, good place for the cash out. Where is my here? So that's from the euros. Now, before I move on to the new one from the euros that starts to be interesting, this is the Euro Kiwi. Is there any question about anything discussed so far, guys? I want to put some weight on the current market conditions. It's very, very important you see that live, that some market conditions are those who provide you trading opportunities. Some market conditions are those who provide you managing opportunities, meaning enjoy your position and manage them. Manage could be partial cash out, could be trading the stop losses, could be partial cash out and trading the stop losses, could be just reducing the risk, could be partial hedge, and whatever, right? Whatever fits in your trading strategy. But it's important to be able to spot these changing market conditions, because we as traders, what do we want? Always the market to move, always to provide some opportunity, always to provide some setups. Of course, it's good for the wishes, right? It's good for an article or a video in YouTube. That's not the reality. The reality is, in the market, there are always changing conditions. Sometimes it's best to trade. Sometimes it's best to sit on the fence waiting for opportunities. And sometimes the conditions are manager positions. Normally, such conditions about the management happen before critical events or fundamental news. Not talking about the intraday noise, talking about the expectations for something big, like the cash rate next week. That's where you would see this whole structure building up this way that will show you manage. Why it's important to manage? Because it doesn't matter how well we draw the lines. At the end of the day, the market will decide by itself where and how it will want to move. But when you are riding successfully any cycle, ending or developing cycle, and you enjoy your position, but the market gives you the sign to be careful, the first thing to do is make sure you are safe, at least break even, because you do not want to be exposed to randomness or counter reaction by the market to your analysis and your trades. And as annoying as ending up in break-even is, it's important to remember that break-even is not a loss. Traders tend to forget it in times. All right, so that's why I wanted to stop for a second and remind that. I want you guys to remember that and to remind it to yourselves, even when we're not in live meetings. Sometimes the market conditions are manage your positions. And that's very important. And it's very important to understand how it's done properly. So that's for the euro. Yeah, let's continue. Then the new one on the list is the euro versus the kiwi, as I said before. And here is what we are facing. This is the weekly cycle that provided this little retrace, approaching towards 38.2 corrective level, which is around the 170. The daily is building up, and I say building up because it's not yet over. We don't have divergence yet. A bullish hidden divergence, and mainly the 4-hour chart, which made these two waves correction, and we could break it into cycle by itself, as you can see here, coming to the critical levels as well. What are these critical levels? Right here. This is a zone of clearance. A lot of stop losses would be located here, right here. By ideal, we want to see this leg ending down here, making some false break, bullish divergence, of course. And then we have two options. Option number one, mark the trend line. Once we get the breakout, start looking for possible buys. Buy setups. Option number two, if this is the current leg developing, it has to be structured by itself on the 1 hour. Right now, we don't have anything on the 1 hour. So likely to assume it has some continuation, for all those of you who are involved, right? But once this will become and slow down with the divergence by itself, 2 or 3 lows, next to the psychological 170, next to the clearance zone, which we just saw, remember, cash out is the right thing to do here. So far, what do we have? The daily is building up a bullish hidden divergence, which means not yet built. 4-hour did not have any ending divergence on the current cycle, so we expected a new low. Bearish hidden divergence for this mini trend continuation, right? And the 1-hour chart that provided the pullback and a trendline breakout. And this is what should continue and build up here, 2 or 1 more low. Structure like that will provide us the buy opportunity. Okay, so marking this area, this is the place where we will be starting to look for trendline breakout or the 1-hour chart to make the false breakouts for us. For the corrective cycle, mark the Fibo levels. You can see that the 100 is right there. Okay, too many factors to the same place. Okay, now also take a quick look on the statistics. Very interesting fact. Middle class though, but pay attention to this series. Very, 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 very tight zone. And we're slowly going there. By the end of the week, we should be there, unless there will be some surprises. Okay? So that's for the euro versus the kiwi. Brett, I prefer, if you have any question about the crystal ball, it's one of my systems that I work with for statistics. That statistical indicator, if you have any question, I would prefer to explain it in the Telegram chat, okay? Or private. You can, of course, contact me private. I'll be more than happy to answer all the questions. Just don't want to take the time out of the live room for that, okay? So please drop me in private. All right, so that's for the euro kiwi, adding to our list. Next ones, pound franc. We reached our first place of cashing out. Discussed about that here. Okay, 4 hour, 3 higher highs to a correction, right? Good place for cash out with this divergence. So what's happening with this pair? Assuming there is still room for a potential further run towards 161.8. Let's take a look on this pair and see if anything changed. The answer is no. We're dancing around the same area. No new gain momentum to the upside, no momentum to the downside. And according to the daily triple cycle, in this drop, the 161.8 would fit in if we are going to see this expansion. It's going to fit in the 50% retrace. Of course, we can go with special cycle there, bigger view. All right, so that's for the pound franc. No reasons for full cash out. We don't have false breakout and trend change. Therefore, partial cash out. We don't want to leave our position to randomness, because if that's what happened, for whatever the reason is, any tweet from Trump or any disappointment from the Fed or whatever it is, we don't want to expose our profits for randomness. Remember that. Okay. So pound franc unchanged. Pound dollar bullish after the corrections, also currently unchanged. Buy retraces was and remains the plan for this one. And quick reminder, this is the cycle we work with. So the correction should be in two waves here, or a range. This or other way around, the view is bullish. Nothing new under the sun here. New Zealand and Canadian created the, well, this has to be updated. This one created the 3 higher highs, 3 higher low structure on the 4 hour. Two waves came in play. The expectations now for second leg. The blue refer to the daily. The pink is how the 4 hour builds inside the daily expectations. So this one is again in play. New Zealand dollar. Let's take a look what happens with this one. 20 candles right. Bullish divergence. We expect the top of the Bollingers. Now we do need to pay attention to two things here. This develops a bearish hidden divergence. 4 hour develops an ending divergence by itself in two legs. It yet refuses to make 3 higher highs, 3 higher lows. And because of that, two waves refers to as a corrective mode, right? The ABCD. It's not building up a triple, which hints for deeper corrective yet. Therefore, New Zealand dollar is a good place currently to cash out, stay neutral, and wait to see for clearer signs. Once again, daily is bearish hidden, this one is bearish basic, and this trend line of the ABCD structure is breaking. What's next? We don't know. We don't have a cycle for a sell, but we don't have the synchronization in cycles for the buy. So the best position currently is neutral. So the New Zealand dollar is removed from the list right now. For all those who are enjoyed, this is a good place for cash outs. And now we'll wait for the clearer opportunities that will develop from here. Dollar yen, we want to see it going towards the 108, and dollar yen is right next to that. And again, look what builds up right here. triple descending cycle daily is building a bearish hidden divergence next to a falling trend line, very powerful 108 zone, 108, 108.50 actually, for money taking. And the difference between this one and the New Zealand dollar that we just saw is the fact that we have the higher highs, higher lows here. So this one is expected to be corrective for trend continuation. Right? Daily hints the bullish, 4 hour fits in this structure. Now the question is, where do we work with the buys, with the sells here? So let's put the levels and we will see why the 108 is so critical area. So it doesn't matter where we start to measure from. So move this one a bit. You can see this is the first zone. This is slightly higher from the bigger cycle. And if we go with the current legs, they as well will take us towards the zone of 1.8. So how, since this is an ending cycle, triple descending, what's next for this pair? This is endings. How does ending cycle end? With false breakouts. Horizontal false breakout was not yet in play because this level was not broken, right? This high. So we don't yet have any false breakout in play. So we require to see one, two, or at least 3 lower highs, 3 lower lows for a trend change, right? Lower highs, lower lows represent a bearish trend, and if they will happen from the ending cycle zone of the 4 hour, we can work with that on the lower time frame. So this area right next to the 108, slightly higher, slightly lower, no problems, but we require a reversal sign. Keep in mind that false breakout could be horizontal, false breakout could be also alternative trend line. So if this would be one, the big trend line could be the second, and the lower lows then would provide an opportunity for the sells. So those who are in buys, riding it, enjoying this 1 hour chart bullish hidden divergence that provided the trend continuation, this is your place to make the profits around the 108. Those who are not involved, this area should be the one that will provide some short-term opportunities. We also have 20 candles right here, the divergence, right? Everything here comes in play. We discussed about the statistics before. Take a look on these two numbers. By the end of the week, we are getting very, very close to there. Okay? So attention for this pair, and mainly at that moment, because we don't yet have sell calls, it's a good place for cash out. Let me just check my list. That's discussed. Euro key we discussed. Great. So this is from the Forex view. Now, commodities, indices, and the rest. So the German DAX, we are still in a waiting zone until the trend line is broken, this one. As long as it's not, we are on a waiting list. Gold, we are riding a beautiful sell here. Reached the critical zone around this clearance area. As you can see, did not yet clean, but right next to it. and bullish divergence, bullish slowdown in play. So possible reversals to happen. 3 lower highs, 3 lower lows. It's building up. 20 candles right on the Bollingers. Good chance we will see some correction. But on the daily cycle, the one that we trade, this is what should build up. As long as we are below 61.8 Fibonacci retrace of one shot, the idea here is sell the rallies. Right? So the 1 hour chart, you can see it a bit clearer structure. Right? So 2 waves and sell, or a hold of a range and trend continuation. Okay, going back to the daily, where the cycle all starts from, that's what we work with, that's what we expect. Invalidation 61.8 if we suddenly cross above this level, right? And the natural gas, perfect one in a run. We discussed about the area between 260 to 270, slowing down, great place for partial cash out, no doubt. And why partial? Because according to the longer view, the cycle from the weekly can still offer more to come. So I wouldn't rush into full cash out here. Doesn't make sense. Partial, majority of it, no problem. Full, too early. And those who miss the party, if and when the correction comes, and I repeat, if and when, because sometimes when the trend runs, it runs. It doesn't pick up those who miss, right? But if and when the trend comes back to provide this opportunity, it should be a good opportunity. Vladislav, dollar franc. Dollar franc, honestly, I don't see a cycle in play. Not quite sure. If it will manage to hold this area, then the possible structure of this trio could provide the sells. I don't see it currently super clear in terms of cycles, so not in play yet for me, based on cycles. Okay. Stocks, nothing really changed, nothing really new, so not going to waste your time on it, guys. We're still all the same in terms of stocks. The only one that requires some attention is the Dash. We have our report crypto here. Ripple and Ethereum are both for the daily. Dash was for the short term. We wanted to see the 4-hour chart drop and buys, and 1-hour chart would have to fit 2 waves, and this is what it's trying to build right now. So if we manage to get it, the break of the trend line should be the one that we will want to work with. 3 higher highs, 3 higher lows, 2 waves down, break above could be, well, technically should be a good sign. Now we need to see if it will manage to provide this opportunity. Second leg, break above the trend line. And that's all for today, guys. Once again, as you can see, and it's important, extremely important to remember that, to understand that, and to remember that not always the market is into, oh, here is a new opportunity to trade. Sometimes it's all about cashing out the profits or adjusting the views. All right? So keep it in mind. Don't force. Sometimes it's a waiting time. Sometimes it's sitting on the fence time, sitting on the beach time. Sometimes it's cashing out time, right? And sometimes, like previous week, every pair almost talked. It's time to be there. So for all those who are involved with the discussed before trades, it's time to enjoy them. Thank you for being here. John, totally agree with the Ripple. Now let's see. let's see how it will build up there. Enjoy your evening, guys. Thank you very much for being here. I'll see you in the Telegram chat as well. Bye for now.